What's up, everyone? It's May 19th, 2025. Looks like we got a nice spike in channel today. Bulls are doing good. Hope you guys had a good weekend, had some fun. It's getting hot in San Francisco, so yeah, here we are. Daily chart got another leg up. Well, every chart got another leg up, but we can see it on the daily chart. I want to give a quick shout out to everyone. I really appreciate you guys always tuning in and showing support. I love talking to you guys in Discord, so keep up the questions. They're getting good. Some of you guys are messaging me your P&L, and you guys are doing good in passing eval accounts. That's always been my main goal, is to help you guys out, and together we'll get better. This weekend, I'm going to drop Trends Chapter 6 and new members video talking about breakouts and how they trap traders and what we can do with them. So stay tuned for that if you're a member, and if you're not, I got another video. It's going to be Trends Chapter 6. So yeah, here's the daily chart. Here's a 15-minute chart. Where are we? Okay, so I just mentioned 3 legs up. I'm resetting the count from the breakout here. That's a swing. What's interesting is we don't have a bear bar yet. So one could argue that this is all a bull leg, but I'm counting trend line breaks. Leg 1, pull back. Leg 2, pull back. Leg 3, leg 1, pull back. Leg 2, pull back. Leg 3. Small bar, so that's a compression. There's a pullback from here to here, and then the second pullback is from here to here. That was today's gap down, and then it ended up being a rally. Why did we have a rally like today? I kind of just answered it. On the higher time, the chart's freezing up. Give me a second here, guys. Okay, on the higher time frame, it's a trend line break, and in a good rally, a trend line break is usually a first buy. So this is a strong rally. We broke the 16th. My dog's barking. I hope you guys can't hear that. We broke the 16th low. That's Friday. We broke that low with today's gap down. So this gap down is this trend line break, and then this trend line break, bulls see that and they want to buy it, and that causes the next leg up. So trend line break, they bought it, and it caused a rally, and then we had a channel. We experienced the full market cycle today from breakout, channel, and trading range. So I'll be pointing that out along with the trades at the end of the thing. Let me turn on the numbers. So we have a big gap down, breaks the trend line, breaking yesterday's low, which doesn't happen too often yet. Hasn't happened yet. I mean, we broke a low here, rallied, broke a low here, rallied. Every time we broke a low, we rallied. So bulls are strong. Big gap down, bar 1, bull bar closing on its high. Already, that's a problem for the bears. Not good for a bear trend. Bulls want to get a reversal and a rally. Bears want this to be the first pullback and a sell-off. Bar 2, bull bar closing on its high. Has a tail, so the market did sell off. It was a small pullback. Bar 3, as soon as the market sold just below the high tick here, bulls bought it and rallied again. Same thing for bar 4, sell off and a rally. I'm counting these tails as sell-offs. So there's two-side trading, but for the 5-minute chart, we got multiple bull bars closing on their high. And we have gaps. So bears are now getting trapped. Whenever there's a gap, we know bears are trapped. In this situation, it's a bull gap, so we know bears are trapped. If there's 3 bear bars in a gap, then bulls are trapped. But we have 3 gaps within 6, 7 bars. So that's good for the bulls. Not good for the bears because they have a gap down. So that's bearish momentum. They want to see that continuing. Bar 5 is the inside bar. It's the first compression bar. So expansion and compression. Bar 6 starts to become a bull flag. It closes above the bar 5 high, but not on its own high. So the candle by itself is not good, but the context with the rest of the bars is good. Breaks out. So here's a bull flag. The pole 5, 6 is the bull flag. Breaks out. Bar 7. Bar closing on its high. Bar 8, another bar closing on its high with some gaps. Now we have a lot of gaps. That's bullish pressure. So if you're looking to get short, bears got to do some damage here. What did I say? Bar 8 closing on its high. Bar 9 is the first opposite bar. This is a tricky opposite bar because I have it on the EMA, and it kind of looks like bulls are good. There's going to be a reversal, like a sharp drop. That's something I would think about when I first started trading. That bad fall through on the EMA, failed breakout. But the context is not good. Bulls are breaking above the higher time frame EMA, so it's in the bull regime. And bears have not been able to get a single bar in 8 bars after a big gap down. So that's also not good. bar 8, bar 9, first pullback. Bar 10, you can buy that and scalp out. One tick past bar 8. There's your leg 2. Then we get a deeper pullback. Bar 11 and 12 is that deep pullback. It's actually a wedge bottom with the next bar is over. So 11, bear bar closing on slow. 12 is a bear bar. It sells off and then rallies. So now we have a bull leg starting at the low of 12. This point right here is the bull leg and it rallies for a few bars. Bar 13 is an inside bar. I think it's okay to get out shorts. If you are short here, look at the close on 12. It's not the best close. Bar 14 rallies, but then sells off, so not the strongest bull body. Bar 15 has a bear body, but has tails, so it's more trading range price action. Then we see bar 16, bear bar closing on slow. 16 looks like it's testing the high of bar 7. There's more buyers at the high here. Every time it comes down, it rallies. 16, 17. Bar 17, same situation, sold off and then rallied. Doesn't break the high, but bad follow through for the bears. So if you're looking for a reversal, bad follow through. Bar 18, inside bar. There's the wedge bottom I was talking about. Push 1, pull back, push 2, pull back, push 3. Wedge bottom, bull flag. We still kind of go sideways for a little bit, but it's sideways to up. A lot of bull momentum. Bar 19, breaking out above the EMA, bad follow through 20, trading range behavior. Now we have a bear channel, and then we're looking at a bull channel. 20 sells off, but then bulls buy the pullback, and then sideways 21. Bull bar closing around its midpoint, has more tails, trading range price action. Then we get 23 and 24. Two bear bars closing around their midpoint. Not the best for the bears, not the worst for the bulls. It's more of a pullback, testing this bar right here, the 1950, the pullback to the bar 19, 50% pullback, or it could be testing the 18 high. They're around the same level. Bar 23 rallies and sells off, trading range behavior. So we're in a trading range right now. Market cycle is breakout, first opposite bars channel, and then trading range. And there's two types of trading ranges here. Here, I would still count this part of the channel. I would say the real trading range starts between 50 to 59, and then that's the end of the day. 26, bear bull bar closing on its high, trapping bears. Again, this is a swing point, and that's usually where gaps happen, at support and resistance. This is resistance, limit order bears are there, traps them on 26. 27, rallies and sells off. 28 gives the trap bears a chance to get out at break even or for a little small profit on the tail of 29. When bears are going to buy back shorts, this is going to cause a rally because bears are buying back shorts to get out at break even. Bulls are going to buy the pullback, so bears are forced to do what the bulls want, and that's buy the market. 30, bull bar closing on its high but has more tail. 31. Bull bar closing on its high, and now we have 3 bull bars in a row. So then we have a micro channel here. Pullback 32, bull leg 33, second pullback 34. That makes 35 a high 2. So I'm counting this, pullback high 1, pullback high 2. 35 is a high 2 that comes at a worse price. So if this was the high 1, 35 is the high 2, and it comes at a worse price because we get more information. So I think it's a good high 1. The problem with buying here is you could be buying at the high of this trading range, but with the context, I think it's okay, and you can see it worked out. 36, bull bar closing on its high, sideways behavior. Bulls get a final leg here, becoming climactic. Bar 41, bull bar closing on its high, trapping bears. And again, where does this gap happen? It's happening at resistance right here, the swing at 36. Limit order bears put their limit order right around here. Make it red. And then look where the gap happens. So you know they're going to be forced to either hold onto a losing position or buy back shorts. 42, bull bar closing around its high, has a tail, so starting to pull back here. The pullback starts at the high of 42 to the low of 43. Bulls buy that and get a bull bar closing on its high of 43. Another bull bar closing on its high of 44. Out of this entire rally, this is the second nicest leg. The first leg started right here, and it was a good leg. Again, reversals are forming a breakout. So here, this is a reversal. Bulls are getting a reversal and getting their second leg right around here. This whole thing could be its second leg. So nice leg by the bulls, and it's the last leg. Could be climactic. Leg 1, pull back like 2, pull back like 3. And I like to talk about how each leg can have its own 3 legs. So here's, if this was 1 leg, here's 3 legs, like 1, pull back like 2, pull back like 3. If this leg 2 was 3 legs, here's its own legs, like 1, pull back like 2, pull back like 3. And where's the 3 legs here? I hinted at earlier, like 1, pull back like 2, pull back like 3. Bears get 3 legs down, like 1, pull back like 2, pull back like 3. Wedge bottom in a bull regime usually gets bought and has a bullish breakout. 45, bad follow through. We're far away from the EMA now. Market could start to pull back. 46, bear bar closing on slow. 47 is a high 1 and a 3rd leg in a trading range. So we don't know yet. The last leg in a trend is the first leg in a trading range, and this is a high 1 in trading range. They're usually better fades. 48 has a tail, so we know bulls are trying to buy here, but they're underwater from this price right here. So when the bulls get filled on 47, the bulls see 47, they want to buy it, they get filled on 48, they're in a losing position, the market starts to sell off 49, bulls buy back, buy more, so they're averaging in, and it causes the market to rally 49. When bulls either get out at break even or a small profit, that's now the same situation where I said bears are forced to buy back shorts, bulls are selling out of longs. At the same time, bears are shorting a double top in the trading range, which leads 2 to 3 legs down. Bar 50, bear bar closing on slow, form of a 2-bar reversal, but we don't break the tail on 49. 51, bear bar closing on slow. 52, bear bar closing on its midpoint with a tail, starts to pull back, and now we have 52, bear bar closing on slow. Trading around the EMA, generally when we see bars, 20 bars over the EMA, the first touch is a good buy, but the bulls have had 3 to 4 legs up higher, so leg 1, pull back leg 2. 55, bad follow through for the bulls, bad follow through for the bears. 56, bad follow through for the bulls, bad for the bears. It's trading range behavior. So bulls aren't really buying here. They might want to buy lower into a support level, maybe the middle of this triangle, right around there. 57, bear bar closing on slow. 58, bear bar closing on slow. 58 has a tail, 58 has a tail, and it's the biggest bar since bar 50. So this could be temporarily ending the bear trend. If this is a micro channel, that could be coming to an end. Then we see bar 59, inside bar. I think it's okay to get out shorts. 60, rally, sells off. Bulls buy this pullback. 61, closing on its high. 62, bull bar closing on its high. Bulls rally into this swing right here, creates a double top. The bulls that got trapped here can get out break even. Bulls that buy here are going to buy more lower and get out break even. So bulls again are selling out of a trap. That's how double tops work. Bulls that buy the high here wait for it to buy lower, then they get it back out at their original entry, and that causes a double top, sells off. That's also how double bottoms trap bears. Bears get short right around here. They have to short more, then they get out around the 50% level because that's their break even price, and it rallies. Fall through 68, 69, bear bar closing on its low. 70, bear bar closing on slow. Now we have a big up, big down. Could be trading range behavior. Big up, big down. Market goes sideways. We get a last leg here, testing the breakout point. 50, and sells off 79 and 80. So what are the trades today? Again, I talked about we're going to go over the market cycle. So the market cycle, I kind of did it. Breakout, first opposite bar, 9. Now the market is channeling for 3 to 4 legs higher. After the channel, last leg in trading range. The last leg in the trend becomes the first leg in trading range, and after the channel is the trading range. So here's your big up, big down. So the whole market cycle, breakout, channel, trading range. Now we're going to wait for a breakout again, and the cycle repeats itself. What are the trades today? Well, the first trade I think was bulls going for the gap fill. So once you see this, you can start to target like that. Trading range behavior, the high of 10 to the low of 12. 1-to-1's met there. Gonna delete that now. Again, you can go for these 3 bars, put it at the bottom of the pullback. You can go for these 2 bars, put it at the pullback, and then it starts to become climactic. The double top is also a trading range, so you can see once it starts to break out, bear starts to break out, 1-to-1 there. Go for the bear leg 2, put it at the high of the pullback. That's barely met. You're gonna have to sit through a lot all the way to bar 72. 3 bars here, trading range behavior, deep pullback. I don't think this is the best trade because the 72 broke the 58 low, broke the 60 low. So that means usually when a breakout point, when one tick past the breakout point. The breakout's invalid. Had a bad close and it rallied. That's about 20 minutes, guys. I hope you guys did good today. I like today's context for the bulls in terms of why did we rally. Well, it was a trend line break after a rally, so that's usually a good buy. How many legs do we have? 3 or 4 legs higher, and then the trading range at the end of the day. So that's the full market cycle. There's your context for the day. Hope you guys had a good one. If you want to learn more about trading stocks, join the membership. You can join the membership down here below where it says price action breakdowns. Click join. And if that's not for you, that's okay. Just hit the subscribe button. And if you learned something, share the show. Don't be a hoe. I'll talk to you guys tomorrow. Have a good one, everyone. Bye.